Hello, everybody. This is Matt Swinneman. I'm the CEO of Keybridge Compliance here in Covington, Kentucky. I want to thank you for joining us today. And I also want to thank my friend, Chris Hurley with CAPIS, who's been kind enough to join us and share a little bit about his background and his firm. So, Chris, want to welcome you. Thank you. And would love for you to just kind of lead us off, give you a little opportunity to share your background with our listeners.
Well, thanks for having me, Matt. It's my pleasure to be here. And just as far as background goes, CAPIS was founded in 1977 here in Dallas, Texas, by a fellow named Don Potts, who was a research salesman. And 2 years before he founded the firm, some big changes happened from a regulatory standpoint. Fixed commission rates were deregulated on May 1st, 1975, and they had to amend the 1934 Act to make sure that a fiduciary and asset manager, our mutual clients, didn't get sued for breach of fiduciary duty if they paid something other than the lowest theoretical commission rate they could have paid, as long as they were receiving what they defined as research and brokerage services. That definition was changed a couple of times, amended a couple of times in 1986, then again in 2006. But that was the wave that Don sort of caught, was asset managers saying, oh, so we can actually use our portfolio transactions to pay for independently produced research. And obviously that was a trend that caught on and has propelled CAPIS for the last 45 years or so. I joined the firm in 1992 at the tender age of 12. And no, I'm kidding. 31 years I've been at the company. And we've always sort of operated on three principles: trading excellence, transparency, and trust. And by that, I mean, with trading, a little firm in Dallas had better be pretty good at what they do in order to compete with the big boys in New York and other places in the country. So we've always honed our skills, using the best technology we can, and using guys that are experienced at actually pushing the buttons. When we first got started, there were two places to route an order: the New York Stock Exchange and NASDAQ. Now there could be literally 30, 40 different venues where you can find liquidity to try and get the best trading results. So that's where we focus. Transparency is the second, pillar that we focus on. We only work for the commission that we're paid, and there's no conflicts that we have in terms of routing orders. We don't own a algorithmic suite or own a trading venue. We simply route to the best place where we think we're going to get the best execution. And then finally, trust is something you earn over a long period of time. And over that time, I think people trust the experience of our people and the integrity that we try to comport ourselves with.
Well, and I think, number one, that's a helpful introduction to CAPIS. And you mentioned briefly that we have mutual clients that we would potentially serve. So, give us an idea of the type of firm that you would likely be most well served to be working with.
The registered investment advisor is our core client. Now, we also have private trust companies and banks that are regulated by the OCC or state regulators instead of the SEC, but they're similar in a lot of ways. They either manage common trust funds or mutual funds. They have separate accounts. They may have wealth clients on, different platforms, broker platforms. So they come in all sizes and flavors, but the main thing in common is they are managing money for individuals or institutions. And many of those firms over the years weren't big enough to attract much attention from Wall Street. So they found firms like us that, treated them like they were big boys and got them serviced them well, got them good execution, helped them on the compliance side if they were interested in using commissions to pay for research, which is something that obviously you guys are well aware of. And we've always been a compliance-driven firm. We had to, in the early days, know our stuff about what Section 2080 said, because clients needed guidance there. The last thing they wanted to do was to pay for something with portfolio transactions that wasn't eligible. So that's been sort of something that we've done, since the beginning.
One of the things that you and I have talked about over the years is the need for contingency planning is a big deal for our clients, and making
Yep.
sure that they have key person risk. A lot of our firms have a centralized trading function, and they may have a man or woman, an individual who's primarily responsible for doing that work at the RIA. I'd love to hear a little bit more about how CAPIS might serve as a contingency plan, to maybe offset some of that key person risk for a firm that looks like that.
Sure. I mean, you've got contingency planning, and you also have cost pressures, right? And we've seen both of those, sort of drive the move towards outsourcing certain functions. I think compliance was an early one. Compliance is a constantly changing, and the burden of compliance never seems to go down. It always seems to go up. So I could see why a firm like yours has done so well, because you have so many, just really talented professionals, good people that these firms can lean on as a contingency plan, or as a full-time, hey, I'm going to outsource my chief compliance officer to Keybridge. We've seen the trend go from compliance to middle and back office. And now it's going towards trading. And sometimes it starts out as a contingency, meaning if you're out hunting as an asset manager for larger chunks of institutional, assets, they tend to do more due diligence, and they ask more questions about, well, what happens if your key man or key woman leaves the firm or is no longer able to work? What's your plan for that? And so being able to put a plan like that in place really doesn't cost very much. It's just a document. There obviously has to be a familiarity that we have with the technology that and the processes and procedures that a advisor has. And we like to stress test it, a few times a year. Maybe if the trader wants to actually go on vacation, what a concept, then we can actually step in and help trade that week, just so that we know everything's working and nothing's broken. And then sometimes that morphs into a more comprehensive sort of outsourced assignment if something happens with a rapid increase in assets, which is always beautiful, or worse, a setback where maybe assets go out the door and there's cost pressures. Having sort of a backup plan like that, or if someone leaves, if your key man decides to retire, or your key woman finds another job or wants to stay home with her grandchildren, suddenly you're faced with, do I rehire and retrain, or could I just lean more on my my outsource partner?
Yeah, it's interesting because I feel like we've had the opportunity to have common clients, and I do think you mentioned the RFP process, being able to demonstrate to a institutional counterparty, for example, that you created that backup plan. But help me a little bit, because I know you've talked about transparency, trust. Those are the pillars of CAPIS. How does transparency, factor in when you're setting up these contingencies?
Well, I mean, transparency, I think, is important for any fiduciary of any kind. You want to be able to demonstrate in your disclosure documents, assuming you're a registered investment advisor and you have to update those, you know exactly how you do things. And if there's anything that could remotely be construed as a conflict, you want to put that out there and explain how you're mitigating those things. You know, trading, that goes for all business functions, you know, whether they're, you know, investment process related, or compliance, or trading, operations, technology. So if you don't have ready answers for any sort of questions that you might encounter there, you certainly should.
Well, and number one, I think for our audience, you know, many of whom are wealth managers, some of whom are asset managers, do you see there's an opportunity for CAPIS with either type of RIA, or does one fit better? You know, and how do you go about when you're creating these contingency plans? How are cost structure? You know, how does that all work when you're setting something like that up?
Well, you know, every asset manager that we might encounter is different, right? And our job initially, when we initially engage, is to listen, ask a lot of questions, and listen, get to know who the key personnel is, get to know the strategies that you run, get to know the technology that you're using, get to know your distribution channels, and all those different things. And by gathering all that information, we can work together to come up with a plan, because, you know, the need may be fairly narrow. Hey, we've got a great team here, but we just have to plan for the contingency that hopefully, please God, never happens. On the other hand, the owners, the C-level of that firm may say, well, we know that probably sometime within the next 5 years, you know, Joe on the trading desk is going to want to retire. So we kind of want to start planning for retirement, or the other option at that point would be we need to hire somebody and start training them on that job. So, you know, it really is every different flavor. We've had registered investment advisors that have spun off from another, and so they have to reconstitute, you know, the technology. They have to, uh, you know, uh, have the technology is a big one. What trading system? What accounting system? How are you going to affirm your trades? Yeah, all that different stuff. And then we've also had, you know, trust companies who say, okay, well, we would like to be able to, you know, access street research. Can you help us do that? And CAPIS has a lot of relationships with other Wall Street firms because we act as a buy side trading desk. So we've had a number of trust companies approach us and say, yeah, the vast majority of our business that we have, we want you to do at a low execution only rate. But from time to time, we may want to pay this broker or that broker because they're helping us with strategy, helping us with decision that we're making to maybe enter into a new sector or a new name. Or, you know, we're working with a firm that's helping us with ETFs, deciding which ETFs to use in our asset allocation strategies. So it's a lot of details that we have to just try to get our arms around and help our client make the best decision.
Right. And it's interesting you mentioned technology. I think we have similar feelings on this. When we come into a firm, we tell them we're agnostic. We may have a view on which, you know, different technology offering in a stack would work best for that client, but we work with whatever they have on hand. And I assume that
Exactly.
CAP the same way, right?
Absolutely. I mean, we all know, if you've been in this business long enough, conversions are incredibly painful, right? So when we encounter a client who has, you know, their tech stack sort of set, the last thing we're going to do is say, well, if you want to work with us, you got to make all these changes. You got to change this, you got to change that. No, as long as we can get the orders created and sent to our order management system, then everything is fine from there. Now, on the other hand, if that client says, hey, due to some change agent, like, we're splitting off from this other firm, or the current vendors we're using are forcing us to upgrade. And so if we're going to upgrade, that's the same thing as a change to us. So we'd like to go ahead and look to see what else is out there. So if we're going to have to do a conversion of any kind, let's make sure we're using the best technology we can. And that's an area where we consult with our prospective clients to show them, well, there's a number of different vendors. Like, the technology's changed so much, Matt. So many of the best trading systems and accounting systems that we encounter are all browser based now, right? There's no legacy server that's sitting in a closet at your office, and you're trying to run your whole company off a CPU that's sitting in a closet. Now everything's out in the cloud, and the integration, the speed, and just the innovation that we've seen has been incredible. So, it just depends on what the priority is at that point in time. We're not going to force change where our client doesn't want to.
Well, and it's interesting because we've talked in the past, whether it's a common client or meeting somebody, oftentimes someone like CAPIS or Keybridge will be brought in because there has been a substantive change. A person left the firm, a new, there's been M&A, there's been some kind of large action that leads to the need to have the conversation. So, I know that we've had the opportunity to talk about how compliance and trading, the real mesh point there, but I'd love for you to share a little bit more. Obviously, that many of the people listening today come to this because they've known Keybridge and our work with them, but how does compliance affect what CAPIS is able to do with and for your clients?
Well, as I alluded to earlier, we had to be experts on a very narrow element of compliance, which was the 34 Act and Section 28E of that Act, because there was a time, 25, 30 years ago, where there was a lot of people didn't really understand 2080 and how it affected them, and they wanted to make sure.
That's limited to it a long time ago.
Well,
I think that's a tough one for everybody.
Right. Well, that is a tough one, but it's old hat for us, because it's been a big focus, of ours since our founding. But there's so much to know on the compliance side. And, as a broker dealer, interestingly, you and I had a conversation, a few months ago, where our longtime chief compliance officer, just got an offer he could not refuse. And we were happy for him, but we're also like, okay, now what do we do? So first thing I did is call you and say, we're looking for a chief compliance officer, and maybe because that's something you can help us with. And, we learned, and I think I knew before I called you, your focus is more on the buy side, the registered investment advisor. That's your specialty. But you were extremely helpful in helping us find the firm that we eventually went with. So we just outsource compliance as a broker dealer. And so when you have a change like that, it's case in point. Do you hire? And we did. We looked around. We had a guy who was both our general counsel and our chief compliance officer. So he was a 2-for-1. And guys and girls like him don't grow on trees, we learned. It was very difficult to find somebody that could replace that function. And, we found it to be much more cost effective to outsource, and we get a lot more experience. Instead of having one attorney on staff, we have 10 now that we could leverage if we needed to, but we thankfully don't have to leverage legal help very often. So yeah, compliance has we've always been a compliance driven firm. We've always, made friends with the compliance officers, because we can support them. One way we do
They're
that.
friendly people. I mean,
they are.
We have, friends with the compliance team.
We love compliance people.
Right.
And one way we support them, for those asset managers that do use commissions to pay for research, one of the things that happens when the regulators come to call to audit is they ask, well, how are you using your commissions? Let me see your soft dollar documentation. And we wrote a guide, for instance, years ago, right around the time the 2006 SEC interpretation of 28E came out. We wrote a guide that was written around that whole interpretation, and it was written around a questionnaire that you can use to document, how you use a service, whether it's brokerage services or research, and it just sort of is a checklist. And we found that the examiners, when they see that, they're often not as you alluded to earlier, not as familiar with 28E as we might be, right? So when we can give the clients, a documentation, regimen that the examiners go, okay, well, I guess you know what you're doing here. No further questions. I've had a number of clients call me and say, wow, that was the smoothest part of the audit, was because of the way you guys, gave us those questionnaires and suggested that we review them once a year, and always make sure you're following your procedures, right, Matt? That's
Right.
where they
Well,
look to ding you first, is when you don't follow your own procedures.
that's right. Well, and I think one, you did an excellent job, and thank you for that sales pitch for us too. But it's, talking about how outsourcing, the SEC came out last year with a rule proposal and talked about the types of diligence that they would like to see advisors
Mm.
doing. I think a large part of that was on OCIO, but it included trading, it included compliance. And I think you being able to provide that type of information for clients and potentially even prospects is really valuable to the people that are in the RIA space. And I really do think as more and more people are moving from the broker dealer community over to the RIA, I think we've both seen that over the last 20 years. There's going to be more and more opportunity to have outsourcing, because a lot of our clients, I think some of yours too, they're not in New York, they're not in Chicago. There's great firms that might be in what some would consider secondary cities that may not have the ability to find the talent readily, but they can come to a firm like CAPIS and hopefully a firm like Keybridge and get top class service, even if they're in a city that may be somewhat off the beaten path.
Yep, that's been our MO for almost 50 years now. And they're speaking of what's on the horizon. I mean, Chairman Gensler at the SEC has been flooding the zone with rule proposals, and one of them is hey, you've got to do the same level of sort of due diligence as a small firm that a large insurance company or a large asset manager has to do. And my favorite SEC commissioner, Hester Peirce, was like, well, wait, these people are already fiduciaries. Why are you making them do things that are already sort of covered under the broad heading of fiduciary duty? But Chairman Gensler obviously got his way because he's got the majority. And so hopefully, we don't have too draconian of rules, because this outsourcing rule, as proposed, would cover any key function: compliance, trading, a middle and back office, any function that they determine as a key function. You will have to do all kinds of documentation on, and it's just an added cost that normally and before fell under general fiduciary duty. So we're hoping that maybe some of the teeth from that rule, proposed rule, is it's not as bad as we think it might be. But obviously, it's something you and I are going to be talking about.
Sure.
Possibly later this year and into next year, depending on.
And I also think, and I would assume this is something CAPIS would do, we're focused, to your point, that's a proposal. It's not been adopted. It very well may be modified before, or it may never actually see the light of day, depending. But, we see it as our obligation. Yeah. We see it as our obligation, if there is a diligence responsibility, to make sure our clients are getting what they need. And we would see that as being, a part of how we would, educate them and support them. So, um, you know, getting back to kind of the work that CAPIS does, I'd love to hear a little bit. I know that you have a strong, options based, offering, but I think you pretty much have the entire gambit of instruments. Is there anything that you don't feel like you would trade on behalf of the clients? Is there anything that you really focus on and feel like is your best bet? Is maybe talk a little bit. Are you doing anything in crypto, digital assets, anything in that vein? Love to hear kind of more about the offering.
Right. Thank you. Well, we certainly have U.S. equity covered. We have global equity covered. We can trade in developed markets 24/6. When it comes to certain ID markets like South Korea or Taiwan, there's different rules surrounding trading in those markets. Trading in them is one thing, being able to settle and clear is another. So in developed markets, we can settle and clear those trades. In ID markets, as they're known, we can trade with whatever broker our client is papered with in those markets, and they would settle directly to the custodians. So we can still trade there. We just may not be able to settle and clear the trades in certain markets. Options, derivatives, like futures, we have expertise on our desk there. And fixed income, we have an excellent fixed income trading team. We've had a desk since 1985 that's traded fixed income on an agency basis. We don't have an inventory. Our job is to source liquidity. So if a client has a favorite one or two firms that they like to trade with, they're looking at the levels that they're getting and saying, I bet I could do better elsewhere. They might call CAPIS and have us, compare the prices we're seeing on that same paper, because fixed income is still very much an over-the-counter market. It is not an electronic market the way, basically everything else is. Crypto is a challenge. The real issue with crypto is the wallet and the custody, right? If you have your crypto in a wallet, you don't want to give anybody in the world access to that. And so they haven't, the banks and the big brokers haven't figured out a way to hold crypto assets in custody that is safe. Because the last thing they want is to be a victim of a cyber attack and a client's cryptocurrency just disappears. So we've been watching on the sidelines. We think eventually a solution for this will be brought up. There was a firm, Cowan, that got bought by TD Toronto Dominion. And one of the first things Toronto Dominion did was say, we're getting rid of this crypto product. So there's still a lot of people shying away from it because it's new. And until, people get comfortable, that may be a tough one for the institutional brokerage community to help clients with.
Well, and you and I've talked separately, going back to equities. Would love to hear your thoughts on soft versus hard dollars, what you're seeing in the industry and how people are continuing to employ soft versus hard, maybe mixed. But with some of these different types of instruments, fixed income is always difficult in my experience to talk about best X.
Right.
So, kind of working on how you guys attack that. So there's several questions there. So maybe you start with, what are you seeing on the soft versus hard? And I'd love to maybe on some of those non-equity instruments, how does CAPIS work and ensure best execution?
Okay. First, the hard versus soft. We're agnostic. There was a time in our history where, we sold the idea, hey, you should pay a commission rate that allows you to, offset, legitimate research, expenses with. Now we've just come to the business has evolved to where whether the client decides they need research or whether they're going to do their own research internally, we don't care, right? The amount that we're paid in commission is the same. whether it's a research type of trade or whether it's just an execution only trade. I think the regulations are such to where the SEC hasn't questioned whether it's appropriate to pay for research in a long time. We saw the disaster that was MiFID II, in my humble opinion, over in Europe, where they tried to over-regulate this idea, and I think it failed miserably. I also would encourage any client who's maybe considering looking at, well, what if we raised our rates so that we could get access to information that would help us deliver better investment performance? I mean, that's the reason to do it. Then look at what that delta between, say, an execution only rate of a penny, for instance, versus the research rate of 3 or 4 cents. And I think you'll find that difference, and it amounts to, basis points of return difference. In the equity markets, that really doesn't matter much. That's rounding error. And that way, if you ever had a client question it, you can say, well, we outperformed our benchmark by, X number of hundreds of basis points. We're ahead by 200 basis points. That difference between an execution only rate and a research rate amounted to 5 basis points. So really it's inconsequential. So that's how I try to counsel my clients who are maybe concerned that are we going to get rocks thrown at us because we use some of our clients' assets in the form of a commission to receive investment research. So we see both. We tend to see the quantitative managers, guys who are using computer models and data. They generally execute at low rates and don't care about soft. Guys who are active managers who are trying to outperform really can benefit, and their clients can benefit from investment research, especially if you are running a concentrated strategy where you maybe only own 20 companies and you really want to know what's going on with those 20 companies. Well, Wall Street and some off Wall Street research providers really can help you there. So that was the hard versus soft question. What was the other one?
Well, I was actually, before we go to the other one, because I think that this might actually be a better segue. You and I have talked about how CAPIS is in a position, particularly like let's say micro caps or small caps, SMID, whatever, somewhere where working a trade could actually have a real impact on performance. So in addition to what you described there, as far as potentially using soft in an effort to improve outcomes for clients, how could CAPIS support, one of our mutual clients in having better trading outcomes, which again, boosts performance and ultimately improving client experience?
Well, liquidity is key, right? I mean, if the names that you're trading in are large cap and they're very liquid, then it's pretty that sort of trading is pretty easy. When you start moving down the cap curve, SMID and small cap, that's where you can really, not every broker is created equal, and I think it has a lot to do with the tools and the experience of the trader. As I alluded to earlier, when I got started in this industry, there were 2 places to route a trade. Now there could be 30. And so the experience of the trader and his ability to go cast a lure into these different liquidity pools and see where the action is on that name, that's critical to be able to find that liquidity. And not every firm is equipped to do that, nor do they have the people who've been pushing the buttons. I mean, our average trader on our desk has 20 years experience using the same systems that we've honed over a long time. So yeah, not all trading firms, trading desks on the sell side are created equal. No, not at all. So that that was the question about liquidity. What was the other part of that?
I mean, one of the kind of to follow up on the earlier question was, with some of the other instruments, like I think many of the people watching us today would have some comfort with the application of 28E on the equity side. But what do you see and how do you tackle that in options and futures and fixed income, for example?
Well, before I go to those other asset classes, I wanted to touch on ETFs.
Yeah.
Because they're very popular because of their tax efficiency. So if you're outside of a qualified account, their ETFs are great because of the ability to not have reinvested capital gains and dividends and phantom taxes that you're having to pay. But they don't trade the way people think they trade necessarily. Like a spider, for instance, those trade like water out on the exchanges. But some of the more liquid ETFs, the difference in price you can get from one venue to another can be dramatic. And it's based on whether or not that venue or that market maker is, where his book is. If you're trying to buy an ETF and he has creation units of the ETF that he's long, then he's going to be more aggressive in selling them to you. If he has to go create them in order to make that market for you, then he's going to be less aggressive because he's got to incur costs to go fill your order. So we certainly advise, especially our advisor clients that use an asset allocation strategy where, when you do your quarterly rebalance, sometimes the size of these orders are such and the liquidity profile, excuse me, are such that what we do is we go out to several market makers and we don't tell them which side we're on. We just say, hey, here's the number of shares. What's the give us a two-sided quote. And so the guy who gives us the best quote, wins the trade. And you'd be shocked at how much disparity there can be on the prices that we get based on whether or not that market maker is aggressive on the other side or is less aggressive on the other side. And that is very reminiscent of how bonds are traded, right? So bonds, the particular dealer that you're asking may or may not have that bond on hand, or and bond dealers are running their inventory like a bond portfolio. So their appetite to buy or a security from you or sell a security from you can change from day to day. So having a firm like CAPIS who can help you canvas a much broader number of dealers to see who might be more aggressive on the other side of your order can make a huge difference. So you mentioned TCA, trade cost analysis is much easier in the equity markets than the fixed income markets. And we don't pretend to have a solution on the fixed income side. We have something, but it's the benchmarks on the equity side of things are much easier to understand and are based on more data and statistical occurrences. It makes it a lot easier. Fixed income is still a riddle that I don't think anybody has solved in terms of.
I was going to say that's not a CAPIS thing.
No.
That's right. So, well, this has been really helpful for me. I wanted to give you an opportunity. Was there anything that we haven't covered that you would love to be able to share with our audience about CAPIS or yourself? Or, I just think ultimately the takeaways that I would like to make sure our audience, there is a need to ensure continuity. There's risk management issues. There's the opportunity to improve processes. We're big fans of outsourcing, obviously, and we think that it can be applicable in a number of ways. So just love to leave you with the floor here at the end and just whatever you'd like to share. And again, thank you for being with us today.
Well, Matt, thank you for having me. And I hope that this discussion is helpful to your audience, that we at least maybe touched on something that interests you guys out there in the audience. Obviously, I'd be happy to talk with any of you who said, "Hey, tell me more about this ETF thing," or, I think that when you're looking to outsource or looking for a contingency partner, a contingency plan vendor partner, you really have to look at, the people involved. And, one of the things about outsourcing that always makes me a little nervous is, I would hate for someone to have to lose their job, due to an outsourcing type situation. But what I find is usually it's something that was going to happen anyway. And if the manager wants to survive, hopefully it's on the positive side, right? They're
Right.
growing so fast, they need help and they can't hire fast enough and train fast enough. But if it's on the other side of things, what I found is a lot of managers are able to repurpose employees and get them more involved in the investment process rather than the operations or the compliance process, because the people out there are what are important. And we've certainly tried to focus on that and help our clients as best as possible and guide them, to the best decision.
Well, and I think you hit the nail on the head in the sense that there's, even the most well-run firm, there's always an opportunity to create redundancies so there's more certainty on moving
Mhm.
forward. And outsourcing is a way to do that. It's also a way to complement an internal resource, again, whether it's trading, compliance, what have you. But I'll speak for everybody. Thank you for your time today. Really appreciate it. Learned a lot. And just thanks, and thank you to our audience for spending this time with us, and look forward to talking with you again.
My
Thank you.
pleasure, Matt. Thank you.
Take care.